right, so let's go over each bucket in more detail, starting with the first one, big business. Big business with deep pockets. I'm going to give you a classic example. Earlier this week, IBM, you know that company, they reported. And after interviewing the CEO, the new fellow, Arvind Krishna, I said I like this strategy. I said I like the company. Krishna's trying to aggressively grow his hybrid cloud business, something that's gotten a lot easier since he brought in Red Hat, one of our faves, to help convert customers that might ordinarily just go right to Amazon Web Services or Microsoft's Azure or Google Cloud. I think there's enough room for everyone in the cloud business that's growing so fast, and IBM's got a leg up with businesses that need good encryption, think Chinese stealing your data. At the same time, he's committed to maintaining IBM's juicy dividend, which currently yields 5.3%. So what happens? IBM reports a good quarter, stock gets clobbered. I tell you to buy it because the balance sheet's strong and business is fine. Stock goes to 116 Tuesday. It's now back up to 121. I think it's going higher. Second example, the rails. Union Pacific, long my fave.
All aboard?
Yes, the big West Coast Railroad reported so-called weak sales. Cargoes were outright weak to subpar, exception of grain going to, our friends in China, and beer. Hey, who doesn't like beer? Both of which are thriving. But Union Pacific's done a remarkable job of cutting costs in recent years. It's so efficient that even with lackluster sales, it was able to crush the earnings estimates. I bet they keep delivering, even if the economy takes a long time to recover. And they pretty much said that. Oh, and by the way, management committed to keep paying its dividend, which currently yields 2.55%. Great balance sheet, so of course that payout's safe. It rallies $5 or 3.5%. Most people thought the stock would be down. They're not thinking about the new normal. How about the second bucket? All right, these are companies that were made for this moment, the ones that thrive in this new stay-at-home economy. Easy ones, Amazon, Walmart, Costco. Hey, we saw it today with Target. They're poised to carve up pretty much the whole retail space, leaving almost no one other than maybe Home Depot and Lowe's. Even before COVID-19, these companies had the scale to get products much cheaper than their smaller competitors, which always allowed them to offer you lower prices. Now that so many smaller outlets have been forced to shut down already, the big box stores and Amazon own the whole industry, especially if they were smart enough to start carrying food. I'm going to throw in Dollar General there just as an afterthought. Oh, by the way, as Target CEO Brian Cornell told CNBC this morning, in April alone, our digital growth is up over 275%. We've just seen Cyber Monday occur almost every day, but the volume is twice the size of a normal Cyber Monday, end quote. Wow. The stock was down today. I bet analysts rallied behind it, especially given the fact when Shopify made similar comments, so they talked about Black Friday, their stock jumped gigantically the next day and the next day and the next day. Who else is made for this moment? Well, how about Kimberly Clark and Procter & Gamble? I mean, come on. I mean, when you stay at home, you end up using more of their products, especially consumer toilet paper, because of all this social whatever. We're practicing physical this or that. Regina Gilgan's not here, our executive producer, but yesterday she scored an 8-pack of toilet paper. I mean, holy cow, white gold. Yeah. Commercial toilet paper, the kind in your workplace, different splutching. So Hormel, yeah, Spam, that's a keeper. Smucker, peanut butter, General Mills, cereal, and that really expensive pet food that we feed our dogs, not that they know the difference. And Mondelez, think Tate's, but also Oreos. They're crushing it. Same goes for McCormick. Talk about liquid gold. Oh, no, that's urine when it comes to IDEX Labs. I forgot. Look at this. Oh, and if you're going stir crazy? You going stir crazy? Well, what did Chipotle tell us? Just drive through the Chipotle lane. Those guys know what to do. Then they're the shelter-in-place place. Zoom, Video, Ring Central, How Can I Help You? Zscaler, Okta, Cramer Family Fave, CrowdStrike. All these companies make it possible for you to seamlessly work from home. Underneath them, there's a whole infrastructure of cloud infrastructure. Yes, data center names, everything from Amazon Web Services, Microsoft Azure, Alphabet, Digital Realty, NVIDIA, AMD. Intel's different, so if that so-called weak quarter causes weakness in the ones I just mentioned, buy them.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.